Hello and welcome to the Integrity365 Financial Insights Podcast. Today, we're going to be addressing some of the speculation around the upcoming autumn budget on the 26th of November. We're going to be tackling some of the questions our clients are currently asking. My name's Sophie Haslehurst. I'm a chartered financial planner at Integrity365, and today I'm lucky enough to be joined by my colleague Sam Lane. Sam, welcome. How are you?
Hi. Yeah, great to be here, and thanks for the invitation.
Yeah, I'm very excited to be talking about this because I feel like we've done nothing but talk about the budget recently. I don't know how you feel.
Yeah, no, absolutely. And I was interrupted sort of mid breakfast yesterday when breakfast TV kind of came to a standstill with Rachel Reeves and a sort of a non-announcement. So yeah, this bit of a better plan for us in terms of about having that springboard.
Yes, but it's definitely something I've noticed people talking about more and more. So when I was at my brother's wedding in Tuscany this year, I made anyone who talked about the budget do a forfeit because I was so fed up of talking about it. So hopefully this will help end that speculation from our clients and give them a bit of reassurance. And that's really what we want to do today. I've sat through a lot of these budgets in the 20 years that I've been doing this job. And I think one thing that is very common across all of those, across all time periods and different economic conditions, is the speculation around tax-free cash and pensions. So I'd love to hear from you, Sam, what you think about this.
Yeah, it's been a theme for many budgets, and certainly last year with the changes in pensions that are coming down the road. In 2027, tax-free cash feels like it might be the next to be attacked again. Um, what are your thoughts, Sophie, on what, if any, action people should take today?
Mm. So I think the main thing to say to everyone is that we need to make sure that if we're taking tax-free cash, which some clients are doing at the moment, but it's all part of the sort of plan that we had in place already. So we want to sort of make sure that if we're making a decision, it's not based on speculation, because as we saw last year, if you take tax-free cash from your pension, it's not something you can cancel and go back on if you then change your mind. You get one opportunity, to quote Eminem, you've got one opportunity, do not miss that chance, sort of thing. And it's a really fundamental part of the modelling we do moving forward for our clients when it comes to how they structure their income, isn't it?
Yeah, absolutely. Reiterate that. Yeah, if you don't need that, there's no need for the capital. Don't bring it into a taxed environment. It's just not good common sense. Um, I guess the only sort of example where that might be a good idea if people have reached their standard lump sum allowance, so that's just over £1 million of 268,000 and £275 of tax-free cash. That's the only moment where it might be worth talking to your advisor. I'm sure that conversation will already be had.
Exactly. And I think the one thing I would say is that we can use it as a planning opportunity to look at alternative investment vehicles. So use this as an opportunity to sort of not speculate about what changes might happen, but to have that conversation about what you really want your pension to be used for in the future and moving forward to provide that income for you. Absolutely right, Sam. I think what we need to do as well is just have this really sort of line in the sand about let's not get flustered, let's stay calm and work on what we've got in front of us, which is there's been a lot of changes to pensions. There was in October last year, and we're still seeing the sort of ramifications from the legislation coming through and what that looks like ready for April 2027. But ultimately, it's really important that, no one rushes to do something before the budget comes out on the 26th of November.
Yeah, absolutely. I know we didn't do it here at Integrity 365, but some of our competitors did jump the gun, act on speculation last year, and ended up with egg on their face because they got it wrong for their clients. We can only give advice on knowns. So until we get to December effectively, it is just a case of wait and see realistically.
And if we sort of catastrophize for a second here, what's the worst that happens? If they start making changes to tax-free cash, your pension is still growing tax-free. So yes, it has an implication as to how you take money out, but potentially if you're just taking that money out and it's in a taxable environment anyway, the net difference is pretty much the same if you're keeping it within a tax efficient wrapper versus not. So I think it's a really important sort of point to make that we don't jump the gun on anything, we stay calm and we just carry on.
No, just one point to add to that,
Mm.
Sophie, is that actually, if there were to be a change, then changing that lump sum allowance might be the change that is made, because that is one that's happened in the past.
Yeah,
When that has happened historically, there's always been some transitional protection there. So what that means is that the system isn't just going to change overnight. There will be a period, it probably won't come in until a new tax year. Even if the government wanted it to, the reality is that providers, administrators just couldn't handle that change overnight. So there's going to be a bit of time to, for calm heads. And as you say, then we can make plans based on, on actual legislation rather than second guessing it.
yeah. And also sort of there's been a lot of sort of articles in newspapers and speculation around this, and I think we always like to sort of caveat these things, and sort of when I'm talking to my clients about it, newspapers have to sell, and it makes a good headline to say you must do something about this now, doesn't it?
Yeah, absolutely. And look, I remember my first job in this role, a decade ago. Frequently, my boss at the time, the most common sort of phrase he had was "do nothing," and that often is the best advice:
Mm.
is to do nothing. It is advice; it's an active decision; it's not passive. But doing nothing is actually often the right course of action.
No, you're absolutely right, Sam. And sort of the sort of one of the other questions I'm getting a lot from clients is there likely to be changes to income tax and national insurance? Now, obviously, we don't have a crystal ball, and if we did, we'd probably be sat somewhere far warmer than this and sipping on a cocktail rather than sort of writing up all our client meeting notes and things like that. But what do you think is going to happen to income tax and national insurance at the budget, or what can we speculate on?
Yeah, and I guess off the back of yesterday's statement, there's maybe a bit more to go at, in that it does look like it's inevitable that there's going to be some change with regard to income tax and national insurance. So I think the government have been using the press as a bit of echo chamber to see what feedback they get. So I don't think anything's nailed on yet, but I would say the one that stands out as almost certain is for employers' NI to be included for partnerships. I think
Yeah.
that's good. Just on the basis of fairness. I
Mm.
think that fits the bill. I don't think there's going to be a huge lot of kickback
Mm.
from that.
And with that, Sam, I think a lot of the speculation has been around the sort of limited liability partnerships rather than just sort of partnerships in general, hasn't it? Because you have a lot of
That's
large
right.
firms, such as accountancy firms and law firms, and that's how they're set up. So what you're saying is that one of the sort of areas of speculation that we've had inquiries about from our clients has been about what that potential change might be, and the sort of impact from that side of things.
Yeah, absolutely. So you'll see that you're absolutely right there. The most revenue that's going to generate from HMRC's point of view is going to be from accountants and solicitors. That's where it's going to come from.
Mm.
But yeah, any partnership is going to be subject to the same rules, regardless of size. I think leading on from that, the other bit that looks clear, like it certainly might change, is the additional national insurance we pay, which is at 2% over the primary threshold.
Mhm.
So that effectively that's any income that you'd pay tax on at a higher rate. So 40%. So any earnings over £50,275, you pay an additional, as well as paying 40% income tax, you're also paying an additional 2% of NI on. I think what they're potentially going to do is move that 2% from national insurance rather and on to income tax. So for anyone on the PAYE system, like us, Sophie, we won't notice a net change. Yes, income tax has gone down, but NI will come down by the same amount, so net effect is the same. But what they will gather with that rent's the big one. So at the moment, if you're a landlord, that is exempt from NI. You push that same tax onto income tax, they're gathering some more revenues. I think that feels, again, there was a lot of reiteration yesterday about fairness.
Yes,
And everyone doing their bit, and that feels like it might fit within that. What were your thoughts?
Oh, I completely agree with you. And I think the other big sort of point to make as well about national insurance is once you reach state pension age, you don't pay it, whether you're working or not. But you don't
Yeah.
pay it on other forms of income, such as investment income, which for a lot of people's gone up since interest rates gone up, but also on pension income. So what you also find in the way they can generate more revenue is by moving it, like you said, but then you've suddenly got this whole other group of people that may be sort of subject to some additional taxation that otherwise wouldn't be if the changes to national insurance rather than to income tax.
Yeah. Okay. And the thought I had is that, yeah, I've not looked at the sums closely enough, but what that may allow a chancellor to do is to pull some other levers around fairness, basically. So if that measure generates enough revenue that she's maybe able to lift the personal allowance a little bit, although that's frozen until 2029, 2030 at the moment, maybe she might lift that up as a sort of compensatory measure. And she might even look at the £100,000 income trap as well. Again, it would sort of fit in that fairness and we're all it together bracket, but we will have to see, obviously.
Definitely. And there's one area that she mentioned yesterday as well, which makes me think that one of the other sort of topics that I'm having a lot of questions from clients around is about VAT. And she said yesterday that she's aware about inflation. It's not coming down as quickly as we'd really like to see. And although we're waiting on the sort of an outcome of the Bank of England's next sort of potential rate change or not rate change, we need to bring that inflation level down, which makes me think that we're unlikely to see a change to VAT. Now, this impacts all of us on a day-to-day basis, but especially a lot of people who run businesses and who are sort of using that VAT system quite regularly. So my thoughts are that I don't think we're going to see an increase on VAT.
No, I think you're right. As you say, it's an instantaneous uplift of inflation. So that it's almost a no-go area. Furthermore, it will be so deeply unpopular with businesses that are already so sort of scrambling after last year's employer national income, national insurance hike. I just don't think that's a something that she's likely to do. What about the other bit we've had from sort of clients and in the press as well is what about mansion tax? Do you think that's a likely area for attack?
Do you know what, Sam? This is something that I feel that a lot of people in my personal life as well as my professional life have been talking to me about. I think that's probably because I live in Surrey, where everyone's houses are quite expensive, and there's a lot of people who are quite asset rich, so they have a house worth a lot of money, but not necessarily the income to be able to support an additional few £1,000s a year. I would be surprised if they do that. The reason that I say that is it hasn't gone down very well in the general sort of feeling. And they often do this, don't they, where they make a small little, oh, perhaps this rumour might happen. And I think stamp duty is very expensive. The housing market's not doing that well at the moment. And stamp duty is an instant win for the government. So I'm not sure why they don't want to encourage more people to be moving. And I'm not sure that a mansion tax would necessarily sort of create that environment, because actually people are much more comfortable knowing, right, this is what I've got to pay day one and then that's it, rather than sort of this, how are they going to monitor it and what does it look like when it comes to a mansion tax. I think sort of linked to that is sort of council tax reevaluation. Here in Surrey, they've made a decision about grouping together sort of certain councils because one of them has a lot of debt and the others don't, and then sort of like separating the county out and having sort of two big councils and that sort of thing to try and deal with that without massively increasing council tax rates. So I think they might be linked when it comes to potential changes, but as I've been saying to sort of clients who are genuinely concerned about this and raising that question, is that we can't speculate on this, but the one sort of comment around it was that really if this does come in, if you've paid stamp duty, then it's unlikely that you're going to have to pay this mansion tax. So it doesn't seem to meet what Rachel said she wants to do, which is decrease, this hole, as it were, in the fiscal policies for tax raised and being spent, because it could be years before people do move and then suddenly they have to pay the mansion tax in the future. So I don't think it's going to meet sort of any of the requirements, but it's something that's been speculated, and there might be some general sort of council tax changes, but I don't think we're likely to see it. But obviously we don't know. But have you had any thoughts on it?
No, I think you're probably right. It feels quite radical. It's one of those that comes around every year as well. Realistically, this is not a new, idea. But as you rightly say, that we've already got stamp duty and council tax. Council tax wasn't reformed that long ago in terms of the upper bands. So it just feels like I haven't heard much about it, and there'd be an enormous amount of work. You'd effectively have to replace those two taxes with one mansion tax. So it feels like there'd be an awful lot of structural change. I don't think that work's been done. So whilst that may want or need reform in the future, I don't think we'll see that later this month.
No. So the one other one that I feel has had the most number of questions and that seems to concern some people is around the ISA allowance. So I've had a lot of clients questioning me about whether ISA allowances are likely to change. We haven't seen a change in ISAs for quite a long time now. And sort of there used to be a different rate for cash ISAs and there were stocks and shares ISAs. But what are your thoughts on potential ISA changes, Sam?
Yeah, there's been a lot of noise around the government wanting to have this sort of growth agenda, and as part of that, encouraging retail investors, so that's mostly watching this podcast, to invest more and sit on less cash. So, we may see the cash ISA amount reduced from maybe 20 down to 10. Whether that sees the stocks and shares will increase by 10, probably doubtful, but that's the kind of change we might see. So I don't think it will affect our own audience that greatly, because most people already know stocks and shares. I guess the only other area in there that might have a change is whether they introduce some kind of lifetime allowance. Who knows? But that's the only other area I can see them making change. How about you? What do you think?
Oh, I completely agree with you. I think a lifetime allowance for ISAs could be something that comes in, because we are seeing people who've invested since they were PEPs and sort of the older legislation and sort of kept that going through to the ISA legislation. I think that could potentially be something, which is you pay tax on ISAs above 1 million. I think you're absolutely right. And I think
Yeah.
that could be something that comes in. So
I guess that the only with that is that money there, it kind of does get caught up in IHT, doesn't it, eventually?
yes.
So it's, whether it's actually worthwhile on a sort of cost benefit analysis from government to get that money a little bit earlier, basically, but it's going to cause a lot of infrastructure change. Yeah, maybe, but I'm not sure how much money it actually raise, because I can't imagine there's a huge amount of people are in that sort of fortunate position.
Mm. You're absolutely right, Sam. So we've covered off tax-free cash, which I think is the biggest question on a lot of our clients' agendas. The sort of
Yeah,
changes,
absolutely.
potential changes to income tax and national insurance, changes around VAT, mansion tax, and also ISA. So we've tried to cover a lot of things, but clearly there is, always speculation about all different areas. And following on from the last budget, we don't know if there'll be more clarification around agricultural relief and business property relief. Capital gains tax was increased at the last budget. Could it be another area of speculation? And dividend taxation is another one a lot of clients are asking about. And it's just being aware of that and just not worrying too much about what might change, that I think is a really important part of what we do for our clients.
Yeah, absolutely. Well, Sophie, thanks for today. I think that rounds things off really nicely. If anyone's got any questions off the back of this, please get in touch using the details in the box below. I will, of course, share more insights once we've got that all on budget. So look out for that on our website in due course. Thanks for listening. And Sophie, thanks for joining me today.
Thanks, Sam.
Yes, bye-bye.